Hi all, welcome to the CA classroom. Today let us discuss the concept of AS17 segment reporting. Before we get into the standard, let me give you a small basic and background understanding to understand why we have this standard. For that, let us take few practical examples. Let us take a company, Tata Motors. Let us take another company which all of you are aware, HUL, Hindustan Unilever. Now, let us take both these companies. Tata Motors will prepare its trading and profit and loss account and balance sheet and tell the net profit this year is, let's say, 30%. For example, these are not the actual numbers. Example, let's say net profit is 30% and they give the total turnover to be an amount. Now, Tata Motors has two main businesses. They sell commercial vehicles and they also sell passenger vehicles. Commercial vehicles includes all these trucks, Tata trucks, etc. Passenger vehicles will include your domestic cars, etc. No. How do you know whether commercial vehicles has contributed to his profit or passenger vehicles has contributed to his profit? It could be a case where commercial vehicles is doing really well for Tata Motors and passenger vehicles is doing very bad for Tata Motors. But because of offset, you have a positive net profit. Similarly, for Hindustan Unilever, they have multiple products. They are into food, they are into cosmetics, they are into home products, etc. They are in almost every product you consume every day. Now, Hindustan Unilever in its financial statements will only report one sales, only one revenue from operations and one net profit which is earned during the year. Now, how will you know which of these products are doing well and which of these products are doing bad? Not only you, the company itself will want to know of all the products they have, which product is performing well and which is not performing well. Given this background, company would have already performed such an analysis. A company like Tata Motors or a company like HUL or any other company which has diversified businesses, whether they report it to outside shareholders or not, within the company to understand the cost structure, they would have already prepared a financial statement, a summary level financial statement for each segment, each product separately to understand which product they have to give more focus to. Now, when such a level of information is available with the board of directors and top managerial people of the company, the standard says this information is crucial. Users, I am investing money in your company based on the brand and the products you operate. So I would also, being the owner of the company, would like to understand which of these products is doing well and which is not doing well. So the standard says every company which has multiple segments should prepare another statement. Additionally, you prepare your financial statements, normal reporting. Additionally, you have to prepare one more summary level statement called segment reporting, giving details of each segment's profit, loss, whatever segment, asset, liability of each segment. Now, next question is, HUL has hundreds of products. How do I classify my segments? If a company has 70 segments, should it disclose information of all 70 segments or only a few segments? So, the standard gives guidance on if a company has multiple segments, of all the segments, which segment information should I separately report and disclose in my financial statement, and what information should I disclose for each segment. So now let us proceed to understand what segment should I report and how do I report the same. In the previous section, we understood the background of AS17 and why we provide segment reporting. Now, Let us understand how do we select segments. If a company has 50 segments, which segment should I show separately? The standard has given few tests. There are totally 5 tests in total. If your segment satisfies any one of these 5, remember it is not necessary to satisfy all the 5 tests. Any one test if it satisfies, then you have to disclose information for the segment separately. Let us understand each of these tests in detail. First, revenue test is very simple. It says if the segment revenue divided by total revenue of the company is more than or equal to 10%, then that segment qualifies to be a segment where information has to be disclosed. Segment revenue, I will consider both internal revenue and external revenue. Total revenue also I will consider internal and external revenue. Similarly for asset, segment assets divided by total assets, if it is more than or equal to 10%, then this segment will also be considered. So two simple tests. First test is revenue test. If your segment contributes for at least 10% of the total company's revenue, then your segment has to be reported. Another test is if your segment is contributing or at least has 10% of total assets of the entire company, then your segment will be qualified. Next, result test. What is result test? Let's say we have totally 4 segments. Segment 1, segment 2, segment 3 and segment 4. Example, net profit. Profit earned by this segment is 7. This segment is 4. This segment is negative 8 and this segment is negative 12. Now, what the standard says is total up all the profits of positive segments and all the losses of negative segments in absolute numbers. So 7 plus 4 positive is 11, 8 plus 12 all negatives is 20. Compare the positives versus negatives in absolute numbers. What is it? 20 is the higher number. On this 20, please apply 10 percentage. Please apply 10 percentage, which is 2. Any segment with more than 2 as a result profit will be qualified. 7 is more than 2, qualified. 4 is more than 2, 8 is more than 2 and 12 is more than 2. Let us say instead of 4, here segment profit is only 1. So instead of 11, this would have been 8. This number will not change. Then in this case, if it is 2 and if segment 2 is only 1, segment 1, segment 3 and segment 4 will be qualifying segments and segment 2 will not be qualifying segments. Let us move to the next text, which is discretionary test, meaning the management in its own choice, even though the segment does not qualify in any other test, can pick a segment in their choice to report information separately. Why will they do this? Let us say the company has newly launched the segment and they are into renewable energy. Now, renewable energy is a field of the future. They believe this segment will grow in the future and they want to give specific importance to this segment and want the users to focus on this segment, and hence even though today this segment does not qualify any of the tests, they want to separately show it so that they will want the users to know that company is going to focus on this segment in the future. Next, what is the 75% test? This test says after applying all the 4 tests, let's say a company has totally 15 segments. Out of these 15 segments, you have finalized 7 segments based on the above 4 tests that you are going to report. 75% test says, finally, once you decide I am going to report on 7 segments, the total revenue of these 7 segments versus the company which has total 15 segments should be more than or equal to 75%. So, Let's say if the company's revenue as total is 100, the revenue of these 7 segments which I am going to separately disclose information for should be at least 75%. So let's say if this comes to 80, then it satisfies the 75% test. Let's say the total revenue of all these 7 segments comes only to 50, then that test says you need to pick a few more segments to ensure that total revenue of reportable segments is at least 75% of the total revenue. So let me summarize all the 5 tests: revenue test, asset test, result test, discretionary test and 75% test. Here my segment should have at least 10% of total revenue, 10% of total assets. Result test example to given steps for that. Discretionary test, management can pick one at choice. 75% test, once you have finalized all the segments, it should account for at least 75% of the total revenue. Now let us proceed to see what is the format in which I have to present my segment information. In the previous section, we had seen all the 5 rules for test. One very important thing is, in the first rule, we had discussed about revenue test, where the 10% can be internal revenue plus external revenue. However, in the last test, the 75% test, the revenue that you consider for 75% calculation should be only external revenue for the 75% test. Now let us proceed to the format. Format is very simple. This is the information they require us to give. 1, revenue, and number 2 is your profit. They don't ask for expenses. They ask for profit because expenses will be revenue minus profit. Next they ask details of assets and details of liabilities for each of these segments. Then you will have your total. I'll have another column called others. So let's say I'm going to report only 2 segments. So segment 1 will be details of segment 1. Segment 2 will be segment 2 details. Next will be others. All those segments you are not going to report will be in others. And then you will have your total. So segment 1 plus segment 2 plus others will give me my total. But between the others and total, there will be a small column called adjustments. What are these adjustments? Segment 1 transferring to segment 2. Intersegmental transfers will be adjusted to give me the total value of sales and profit which is reported in my financial statements. So adjustments is nothing but intersegment adjustments which will be eliminated. Now assets and liabilities, these are common. They also ask for others 2 important informations. One is your non-cash expense for each segment, and second is the additions in the fixed assets. Revenue, profit, asset, liability for each segment is common information, basic expected information. Why are we giving additions of information, additions in fixed assets? Because additions in fixed assets, if it's high for a particular segment, user will understand that we have invested more into assets for this segment so that we can expect more revenue in the future. Second, non-cash expenditure. Out of total expenditure, you will want to know what is the percentage of non-cash expenditure so that you can understand the cash position for each of these segments. So these are 2 informations which are additionally required to be disclosed when you prepare a statement. So the statement format will be revenue and profit, 1 line gap, assets, liabilities, 1 line gap, others, non-cash expense and additions. Each segment give the values, others, the segments which are not reporting, total, in between there will be a column for called adjustments which does elimination of inter-segment values. So now we have seen two important areas where they have been testing in the exams. One is identifying segments to report and second is format for reporting. Now let us proceed to a few miscellaneous concepts in the standards. In the previous segment, we had understood the 5 tests how to identify reportable segments, and then we had seen the format of how to present the reportable segments. Now let us see the concept of what is the definition they have given as to how to identify a segment. Company can have 50 segments. How do I identify if the company has 50 segments? The definition is business segment, which says distinguishable component of an enterprise engaged in providing individual product or service or group of related product or service which is distinct from other components, which is distinct meaning it is different from other components of the enterprise based on risk and rewards. What do they mean by this? A company has various components and each component is providing individual product or service or group of products or services which is different from the other components mainly based on risk and rewards. That means the amount of risk you have to take for a particular product and the reward you might get for a particular product is different from the other products or service. Now, how do I identify components in an enterprise? There are some basis of identification. These are the important points. Let us discuss these with the examples. First, nature of products and services. For example, ITC, soap is one product. Eatables, under eatables we have biscuits, atta, etc. These are one products. Hotel industry, for example, they have restaurants. ITC has restaurants. So ITC has soap, ITC soaps. ITC also has eatables, various eatable products. They have hotel industry where they provide services and they have restaurants. Classify it based on products or services. Method of production. You would have seen capital intensive production, labor intensive production. Let us say company has two products. For one it uses capital intensive, for other it uses labor intensive. You see this in pharma sector where some companies use capital intensive and some use labor intensive. Based on method of production, I can classify my segments because capital intensive will have more investment in assets, labor intensive will have more investment in salary cost. Method of distribution. How do you distribute the products? Some products might have manufacturer, which is the company, next wholesaler, then again distributor, one more distributor, and then it might go to retailers. There are some companies or some products within the same company which might have manufacturing and direct sale to customers. So some product might have a long chain of distribution. Some product might have direct manufacturing to consumers. Most of the restaurant services fall here. They manufacture food and sell it directly to the customers. Class of customers. Now, let us take any AC company. Let's take General or Voltas, any of these companies. They mainly have two types of customers. One is my individuals who buy home split AC 110 or 210 max or window AC. Individuals maximum purchase one or two ACs at a time. Second class of customers are the corporates. Now, these same AC companies also have corporate clients. Corporate clients buy in bulk. They will want AC for the entire floor or for the entire building. So, the company, the way they do marketing, structuring the AC, the cost, pricing depends on the class of customers. The way they approach individual customers is completely different from how they are approach for corporate customers. So you can also classify your products based on class of customers. Lastly, regulatory requirements. Let's take the example of ITC. ITC, among the various products it sells, one of the products is cigarettes. Now, for cigarettes, the regulatory requirement is high. They cannot clear the stock until excise duty is paid. They have so many regulatory requirements. But whereas the other products of ITC, home consumed, etc., all those products, ITC classmate notebooks, they do not have so many regulatory requirements. So you can also classify your products based on regulatory requirements. So this is about classifying a component basis of this. Now there is also one more classification within the standard which says one, I can classify my component based on the business segment. Second, it talks about geographical segment. It also says you can classify your segments based on geographical locations. Let us look at that next. In the previous segment, we had discussed how do I classify segments based on my nature of business, how I do my business. Now we are going to see one more way to classify segments based on your geographical operations. Today, most companies operate throughout the globe and they sell their products in multiple countries. Hence, there is scope to classify segments based on their geographical locations. What is the definition saying? Component, again a segment of a business, of an enterprise, providing goods and services. It can be only goods or services or both. In an economic environment whose risk and rewards, again the words are risk and rewards, are distinct, different from other economic environments in which the entity operates. Now, more than the definition, let us look at the basis. How do I classify it? First is currency risk. Let's say your company is selling goods to US, Middle East and European countries. Now, the currency risk of dealing with US customers is different from dealing with Middle East customers, Dubai, Oman, Qatar, etc., and dealing with European countries. I can classify US as a segment, Middle East as a segment, and European countries as an other segment based on my currency risk. Next, exchange control regulations. Now, let us take the same example. Instead of Euro, let me put Syria, and instead of one more thing, let me put Zimbabwe. Now, if you want to do business, if you want to start a business, it is easy to start a business in US. It is pretty much easy to start a business in the Middle East also. If you want to start a business in Europe also, it is pretty much easy. But if you want to start a business in Syria, it is very, very difficult because of war. You cannot start a business there. However, if you want to start a business in Zimbabwe, the country has a lot of political instability and hence it is difficult. Now, each of these countries have some regulations. How much FDI can you invest? How much money can you withdraw? In certain locations, you can easily invest money and withdraw money whenever you want. However, in certain other locations, there are some restrictions on how much money you can invest and how much money you can withdraw. Based on that exchange control regulations, you can classify segments where all those countries where you can easily remove your investments, you can keep it as one bucket, and other areas where there are a lot of exchange control regulations can be kept as an other segment. Next, political and economic conditions. For example, let us say you are selling goods to Australia and New Zealand and selling the same goods to African countries. Now, the political conditions in Africa is much different from the political conditions in Australia and New Zealand. Even though Australia and New Zealand have different currencies and different governments, more or less the economic conditions and the political conditions in these two countries are very much similar. We call them proximity of operations. Hence, you can club Australia and New Zealand into one segment because there is a lot of similarity between the political and economic conditions for Australia and New Zealand. So based on these factors, you can group your geographical locations into various segments. So this is about classifying based on geographical segments. End of the day, what matters is risk and rewards. The amount of risk in Australia and New Zealand will be similar and much different from the risk you are undertaking when you start a business in Africa. Similarly, the returns also depend based on the country. So you can classify them based on this. Now let us move to the next concept. In the previous section, we had seen definitions of business segment and geographical segment. Now let us summarize what we have seen so far. 1. We have seen how to classify segments based on business or geography. Let us see, once you classify segments, let's say we end up with 50 segments for the business. Next, out of these 50 segments, how many will I report and give information for that? That is the test. We had seen 5 tests. Send all these 50 segments through the 5 tests, and let's say we end up with 30 reportable segments. So you need to show data for 30 segments separately, and the balance 20 will be classified as others. Once this is done practically, you start preparing your statement and do the reporting. Now, the standard says there are 2 types of reporting. One is primary reporting and other is secondary reporting. Large companies can choose what is primary reporting and what is secondary reporting. If a company does not choose, under primary, you will classify segments based on business. Under secondary, you will classify segments based on geography. So, under primary reporting, you will report in this particular format. You will send it through these tests and do it. Under secondary reporting, there are few criteria how to classify your segments. It says, first, total sales of the segment exceeds or is equal to 10% of the total sales of the company. Here, we are looking only at external sales. Second, total assets of a particular segment is greater than or equal to total assets of the company. And third, we will report any additions made. So, in your secondary reporting, you will classify segments based on these criteria and give this information. So, a company can choose what falls in what. They can put business in primary reporting or business in secondary reporting also, and geography in primary reporting. So this is about primary reporting and secondary reporting. Next, there is also a concept of merging the both into the same report, which is called matrix reporting. So within the same report, you will show both products and geography. How it works is, I will classify vertically based on my business. I will write product 1, product 2, product 3, service 1, classifying into 4 segments. Horizontally also I will classify based on locations. Location in India, US, Europe. So I will show product 1's details of income, expense, profit, asset, liability, etc. for each product, product wise and country wise. This is called matrix reporting. companies can choose to report even in form of matrix reporting, where they will plot both geographical segments and business segments into one condensed report. Now, we have not come across these kind of sums in ICA study mat or in the past exams, not much. But this is also conceptually part of your AS 17 and you need to know about this. To summarize, company can report only primary reporting based on business segment, but they also have an option to additionally report secondary reporting using geographical thing, or they can mix the both. Some companies report both primary plus secondary, but majority of them report only on primary. Standard is also giving an option to merge the both and show something called matrix report. So this is about form of reporting after selecting the segments. Now let us move into what items to consider for segment assets, segment revenue, segment expenses and segment liabilities. Now let us quickly summarize what to include and what to exclude. The minute you identify a segment to be reported, you need to know what to consider in revenue, what to exclude in revenue, what to consider in asset, what to exclude in asset. It's very simple. They say for segment revenue, include all internal revenue and external revenue, and also add if there is any common revenue for the entire business, allocate to this on a reasonable basis. However, they say any income which is extraordinary in nature, that should not be included in your segment revenue, and other income like interest income, dividend income, which belongs to the business as a whole, income on your investments, will not be included in your segment revenue unless you will include them only if your business is in finance nature. Assume you are a bank, then you will include the interest. Moving to segment expenses. Include all expenses which are internally within the business or externally generated by transactions entering with a third party. Also, common expenses allocate on a reasonable basis. Similar fashion, do not include, basically you have to exclude extraordinary items of expenses and any income tax related expenses or interest expenses. All these have to be excluded. Coming to your segment assets, include all those assets which are directly attributable towards this particular segment. Common assets, allocate on a reasonable basis and allocate only if you can allocate. Now, there are some assets like goodwill. You do not know to which segment it belongs. So what you have to do is try to allocate. If you are not able to allocate goodwill, then don't allocate it to segments and don't show it as part of segments. Let it be part of others. Allocate only if you are able to identify which segment the asset belongs to. Again, what to exclude? All your corporate assets like advance tax paid, investments company has in other shares, all those will be excluded. Coming to liabilities, all those business related liability for a segment which arise on account of transaction with third parties, that will be included, and other common liabilities again which can be allocated on a reasonable basis. What to exclude? All your corporate items like loans, borrowings which belongs to the company, provision for taxation, etc. All these kind of items will be excluded in your segment liabilities. So this is a brief overview about what to include and what to exclude for each segment. Another important point, let's say company as a whole is following FIFO method for inventory valuation. Now, for a one particular segment alone, can I change this from FIFO to weighted average? No, the standard says whatever accounting policies you are following for company as a whole, follow the same accounting policies for your segment also. So this is about AS 17, segment reporting. In summary, first identify the segments of the business. Second, pass them through the test to identify reportable segments, and then report based on primary reporting or secondary reporting based on the definition for business segment and geographical segment. Company also has an option to follow matrix reporting. What to include and exclude for each segment is given over here. So this is primarily about AS17 segment reporting.